Hi, I'm Suzy Rhodes with Past Masters. Welcome to this week's Questions of the Week. This week, our topic is Financial Reporting 1. You can expect this topic to appear on the SIE exam, Series 6, Series 7, and Series 65. We will be taking a 10-question topic quiz from within one of our Past Masters securities courses. Let's check out our learning management system. Which of the following is not found on the balance sheet? Remember, the balance sheet has assets, liabilities, and owner's equity or shareholder's equity. So what's not one of those? Current liabilities, that would be on the balance sheet. Income taxes paid, that's an expense. So where are expenses found? They're not found on the balance sheet. They're found on the income statement. Let's check the other two, make sure that those are balance sheet items. Retained earnings, that is one of the components of shareholders' equity. Total assets, also found on the balance sheet. Income taxes paid is not found on the balance sheet. So with our questions within our learning management system, once you click check answer, here we found out we had the correct answer because we had that green check mark. You can click show explanation. For a written explanation, there is also the ability, if you click, to listen to an audio explanation. Which of the following is not found on the balance sheet? So every question within our securities courses has an audio explanation. Which of the following statements regarding financials is true? Depreciation is a positive item on the income statement. No, it's not. Depreciation is an expense. It's a negative item on the income statement. Depreciation is a negative item on the statement of cash flow. No, it's not. It's an add back. It's a positive item on the statement of cash flow. It is a non-cash expense. It is impossible for a company to have a positive cash flow, but a net loss for the year? That's false. Because of the non-cash expenses of depreciation, depletion, and amortization, it is possible for a company to have a positive cash flow, but a negative income, a net loss for the year. So the test loves you to know that depreciation, depletion, and amortization are add back items on the statement of cash flow. They are negatives, expenses on the income statement. All of the following are correct statements regarding an income statement except. So reword it without the except. Which is a false statement regarding an income statement? So there's going to be 3 true statements and 1 false statement. The false statement is going to be the right answer. So literally on your scratch paper, write 1, 2, 3, 4, and then true, true, false, true, or however it works out. Something about writing, because you can't write on your computer, write it down. It really does help, I promise. Dividends are paid to shareholders out of after-tax income. Yes. So taxes are paid first and then dividends are paid. That's a true statement. Depreciation is a positive number on the income statement. No, depreciation is an expense on the income statement. So far we have true, false. The company's PE ratio comes from earnings available to common after preferred stocks dividends have been paid. That is true. The test loves that. Interest paid to bondholders reduces the company's taxable income. True. When you have a business and you pay interest to bondholders, that is a tax deductible expense. So it has the effect of lowering a company's taxable income, interest paid to bondholders. So we have true, false, true, true. So depreciation is a positive number on the income statement. That is correct. It's really not a true statement, but it's going to be the right answer. So it's right because it's false. Be careful on the test. Don't let them trick you. Which of the following is not a current asset? So current assets are cash and expected to be cash in the next 12 months. So cash, yes, that is a current asset. Marketable securities owned by the business, those could be sold tomorrow, so those are considered current assets. Inventory, also considered a current asset. Land is not a current asset. Land is a fixed asset. Land, building, and machinery, those are all fixed assets. Which of the following is not a current liability? So current liabilities are monies owed in the next 12 months. Accrued wages, interest, and taxes, those are current liabilities. Accounts payable, yes. So accounts receivable would have been a current asset. Accounts payable, current liability. Mortgage on real property or current long-term debt. So current long-term debt would be a current liability. A mortgage on real property would be a long-term liability. Which of the following is not found on a company's balance sheet? So let's just review here for a second. You know me, I always like to write things down. So when we're talking about the balance sheet equation is assets equals liabilities plus owner's equity. So shareholders' equity. So we would have current assets, fixed assets, and intangible assets. We would have current liabilities and long-term liabilities. And then we have 4 components of owner's equity, of shareholders' equity. We have what types of shareholders? Common and preferred. So we have preferred stock at par. We have common stock at par. We have paid-in surplus, also called paid-in capital, and we have retained earnings. So if we were looking at our client's balance sheet, we might say assets minus liabilities equals the client's net worth. But when you're taking the securities exam, assets equals liabilities plus owner's equity is the balance sheet equation that I would most like you to use. So which of the following is not found on a company's balance sheet? Shareholders' equity is found on the balance sheet. Assets, those are found on the balance sheet. Income, not on the balance sheet. Income is found on the income statement. Income statement is also called profit and loss. Liabilities are found on the balance sheet. Gross profit as a percentage is gross revenue minus cost of goods sold divided by gross revenue. I'm going to explain that one. So all of these things are coming from the income statement. So on the income statement, we have income and expenses. Now I'm not going to make a pro forma income statement. I'm just going to make a little bit of the income statement. It's a very generalized income statement. So if we said revenue minus expenses equaled either a profit or a loss. So the term profit and loss is another way of saying income statement. So the income statement is for a period of time where the balance sheet was a snapshot. So this moment in time as of December 31st, balance sheet. Income statement, we'll look at it for a month or a quarter or a year. So oftentimes we look at it for the year. And revenue minus expenses is simplification. So I'll get a little bit more into detail, but I won't do all of the details. So for any accountant out there watching, I'm not doing everything. I'm just doing a little bit so that conceptually we can get these questions right on these securities exams. So the business, let's say they publish magazines. So their gross revenue, the sale of those magazines, gross revenue minus cost of goods sold. Cost directly attributable to the publication of that magazine. So cost of goods sold. That's the only expense that we're subtracting to get to gross profit margin. So just to make up some numbers. So gross revenue, we'll say, is $10 million. Cost of goods sold, we'll say, was $4 million. Gross profit margin is $6 million. So if you were to look at the income statement for one publisher and another publisher, and you were to look at this gross profit margin as a dollar amount, you can't really compare, because one might be a big publisher and one might be a tiny little publisher, and dollar amounts aren't good for comparison purposes. We need a ratio. So if we take gross profit margin divided by gross revenue, we end up with the gross profit margin as a percentage. And then you can use those percentages for comparison purposes. So gross, not net profit margin, because the only thing that we're subtracting is cost of goods sold. Now, remember, I told you I wasn't going to do everything, just enough to get us to this question. There's so much to learn. So don't worry, in the full course, I do a whole long, big explanation about financial statements. Footnotes are found where? On the first page of the annual report, at the bottom of the income statement, at the bottom of the balance sheet, or on page 6 of the semi-annual report. Footnotes. Footnotes are found at the bottom of the balance sheet. So things like unexercised stock options, pending mergers, acquisitions, litigation, things that would affect the financial snapshot of this company, those are found in the footnotes. Which type of analysts will examine a company's financial statements? Financial statements, income statement, balance sheet, statement of cash flow, reading those is fun. It is fundamental analysts. So the other choices, macro, quantitative, technical. Well, quantitative and technical mean the same thing. They look at charts and graphs. So fundamentals, also called qualitative. Liabilities and assets are found on the, you know this, we did this, where were they? Income statement, balance sheet, auditor's disclosure, statement of cash flow. They're found on the balance sheet. That's it for this week's topic of the week, Financial Reporting 1. Who would have thought you would need to know the basics of accounting to pass the securities exam? But you do need to know just a little bit. Be sure to give this video a thumbs up if you learned anything, subscribe to our channel, and turn your notifications on. If you have any questions at all about this topic, just ask me in the comments below. To check out our course offerings, where I promise you a much longer detailed explanation about financials, there is a link found in the video's description. You can also, from here, enroll in one of our courses. I hope to have you as a student soon. Keep up the good work. Happy studies. You got this.